I've said this publicly for well over a year and a half now. I think it is a mistake to attribute the peak and subsequent drawdown in late 2021 and 2022 as a Bitcoin idiosyncratic feature. To me, it's not simply coincidence that Bitcoin peaked in November of 2021 alongside numerous other risk assets, that it was coincident with the telegraphing from the Federal Reserve that they were behind the curve and they would be in one of the fastest rate hiking cycles in history, dealing to the rapid onslaught of inflation, rolling off their balance sheet, QT, etc. I just think it's simply implausible to suggest that that was a Bitcoin idiosyncratic feature. It just happened to line up with the majority of macro chaos that we had to go through most of 2022. So my view has been that even predating the 2021 cycle, I think the cycles were dead if they were ever were a thing, driven by some halving supply-demand dynamics. I think that wasn't a coincidence also that alongside Bitcoin ripping, you had many other risk assets ripping through most of 2021 that were drunk on the high of the stimmy checks and the ZERP and massive central planning easing. So my view is that these are ex post facto the narratives we develop to justify why price action develops. And to me, right here, I think it's very simple. If the economy remains robust, potentially reaccelerates, I expect Bitcoin to do well. I expect most major risk assets to do well. And the opposite is also true, right? If the economy continues to decelerate, if some of these weaker segments of the overall economy start to get worse and potentially bleed over into other sectors, I expect the greater risk asset complex to struggle alongside Bitcoin.